Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Thanks, Marty. And how about YouTube? Well, thanks, everybody. Good morning. Welcome to the Traders Lab. I'm your host, Tom B. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. We have a lot to talk about. I'm going to start out discussing Friday and then quickly get into today's events and how using the volume profile and the auction process to potentially get in alignment with the market. Which of course, all of this is available in the Bookmap Discord Trader Lab community. And as you know, if you've been following this stream, this is a continuum of the daily auction and how the market changes, how you might get in alignment with it. And it's based on structured trades that I've shared at no cost for everyone in the Bookmap Discord Trader Lab community, as well as the library of webinars, and of course, the Trader Lab community, which is made up of a group of like-minded traders who have come together to leverage their collective experience. So whether you're a newer developing trader or someone who has substantial experience, it really doesn't matter in the sense of what you do. What does matter is what works consistently and what doesn't work. Is what you're doing random behaviors in a random environment, or do you actually have a statistical edge? The business of trading is quite different than many of us think it is. And even from my own experience, when I first started out in trading, I was looking to create predictability, certainty, many of the things psychologically that align with our need as humans to avoid pain. Well, the gaming business, which is what we're in, doesn't operate that way. So if you're trying to create something that doesn't align with the business, you may find that you keep waking up in the same place with random outcomes, which means we all have winners, but over time, you're going in the wrong direction. If that's you, despite your efforts, and I'm sure they're good efforts, and it could be many years of effort, if you keep waking up with Trader Groundhog Day, and I think we just had Groundhog Day, then you may find that you might want to visit the Trader Lab, because your experience isn't any different than any of us, except what you do about it. That might be the difference. So let's take care of business and let's get on to the current market. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only, but if we get into the market, we will discuss it. Okay, first things first. This is Thursday's profile. Now, this is Investor RT. It is my higher time frame software. I've been using it, I think, since 2009. I'm not quite sure, but a long time. And it might be the premier software package for analyzing the auction and volume profile. It's quite good, and for me, it's the only software I would use for the higher time frame, though of course there's other options available, but this is really known for precision and good, let's just say good ways to get in alignment by having accurate data and accurate representation of the auction, if that's something that's important too. Now, this was our target for Friday, 61.48.50. Now, as you guys know, Friday we had some important news come out, but here's the interesting thing about the auction. I'm going to show you a progression of the auction, and this is the RTH only. And this is the volume profile. Now, what this is, just so you know, this is called a micro composite. All it is a composite of volume of days that overlap because the market is auctioning inside itself. And this day was very interesting. We sellers here, buyers here. But let's take a look at something that I pointed out, I believe, in Friday's stream. And that is that we have sell stops, sell stops, sell stops. And below here, thin air and stops under here. So that's important. So we open higher with a small gap on Friday, and our target is here. Let's go look at later in the day. This is Friday at the end of the RTH. Our target was hit at 48.50, and I think we missed it by 2 or 3 ticks, but there's no precision in this. You know, these are auction-based levels. What does it say? It says this is too high. Okay. And then the news came out. Now, the interesting thing is, in TraderLab, we were taking longs to here. That was the trade. And then at this point we hit this is before the news came out. Then we had a reversal structure up near the high of the day. And at the time, we don't know that we're just not going to pull back and maybe go through and come here. I mean, that's just the way trading works. You don't know, you can't predict. But what we did know was we had a selling structure up here, which at the minimum would be a trade management opportunity. In other words, if you're sitting long and you're going for this and you get a sell structure, which I covered all of this in Friday's stream, and you're all welcome to go back and see it. You should review it because then you'll get a better sense of how all these pieces fit together. And then the news came out after we hit our target, and then you have your reversal. However, we also had sell opportunities in here. So there were short opportunities. So if you're in TraderLab, you would be long in the morning up to here, and then you'd be taken out of your long based on trade management or targeting. Then you would have shorts set up in here, and then you'd be on the short side for this. That's basically the way it works. Now, what's going to happen? Nobody knows. Now, we had a discussion about news and how important is news. Well, news can be very important or not so important. Now, there's always reports, so we know those are material and they can impact the perception of value. We also know about the report that came out about the tariffs on Friday, that they were widely anticipated and that companies here in the U.S. were already stockpiling parts, goods, whatever they need. So this was not a surprise. What is surprising is the timing. Now, when the market is surprised, then we get a reaction. And part of that has to do with a knee-jerk reaction. Longs liquidate. These stops are all get taken out. Remember, the market's long. Stops are here, stops are here, stops are here. And the longs have been having a fine time. Well, once you hit your target, then what might happen? What might happen is these guys are going to be under the bus. The market goes up to go down, and then the market goes down somewhere to go up. Now we're going to talk about somewhere. And by the way, if you have questions, please post them. Then I'm going to get into today's real-time potential behavior. Now let's look at I'm now with Investor RT, and I'm pulling out to higher time frames. Let's look at these levels, and you should be writing them down. First of all, the next level up here, and this is not necessarily for today, but it's not completely out of the question, is 60.68. This is the retail price from Friday. And you can see we got down here and we didn't take out the stops here. That to me was definitely this could be nasty moment. Now let's talk about the next level. The next yellow line is right around 88-ish or 80. I don't have the exact number here. It's covered up, but 80-ish. Then we have 59.50 as our next target down here. And if we fall out of this, we have targets below, which I've outlined. Now, this is all before the RTH open. Now, I'm going to show you something very interesting. What's the low of the day? 59.50 on the button so far. Now, and we're still heading higher, and we are looking for potentially, and nobody knows, maybe fill the gap, maybe get back here, or nothing. And then we also have resistance at 38 quarter. And I believe the high of the day at the moment is 38-ish or 39 as of the moment. Is this interesting to you? This is the Trader Lab, and this is auction market theory. So let's go take a look. And if you have questions, please post them, and you're all invited to the Bookmap Discord Trader Lab community. What is that, 38? Let me just get my 38. Let me have this on the chart. 38 quarter. Let me just mark this. 38 quarter. It's on my IRT chart. Let me just get this in here. 38.25. So the 38.25 is an outside edge of a higher time frame distribution. And what is a distribution? It's a clump of volume, basically. And the market is attracted to these levels because high volume in all time frames are fractals. Let me just make sure I got this right. Okay. Now, the fact that stops or pauses at any level, I always consider it maybe. But if you're in the Trader Lab, you would understand where these levels are. And then really what you would be doing is just kind of waiting to see, is there going to be a reaction there? The fact that there's a level is not a reason to do anything, but it is a reason to look at your order flow and to look at the location and determine if there might be something that you might want to be thinking about if we come up here. Now, I'm not saying you can, quote, predict. Prediction is not part of our business, but this sets up a potential short right here if you're a counter trend trader. This is a Trader Lab structured trade. Now, I'm going to get back to the beginning. Okay, and again, thanks for visiting Trader Lab today. I don't call trades. You don't need to take my stops. I take them. Everybody does. But if you can understand the market as far as how it works, you may at times be able to get in alignment with it, and that's pretty much our job. Let me just try to get back to the RTH open. And you know we had a substantial gap, right? So, and I will tell you that a lot of what I do, I think, might be different than what most do. And the reason is I've done everything. Well, not everything, but most things are derivatives of other material items that are in the marketplace technically. And I found that no matter what I did, whether it was a matter of different time frames, different indicators, even going into system building and design and optimization strategies. And, you know, I was managed assets across a lot of different classes and commodities, we used to call them, right? But, you know, and it was a position trader and swing trader early on when I started. So, whoops, went too far. So basically, what I had to do is figure out why I kept waking up with an outcome that was not good, in spite of all the work and in spite of winning trades. You see, the catch to the whole thing was we all have winning trades. Have you ever considered that if you did nothing, I mean, you didn't even have a bar chart, you just had a button, and you just, and it was a random generator even. So it was random. So it was either buy or sell, that you'd still have winning trades. If that is true, then what does that tell you about the environment that you might be in? And what does that tell you about you as a trader? What that might mean for you. Okay. Now let's get to the RTH open. And again, if you have questions, please post them. I'll do my best. So RTH open, overnight volume point of control, ETH mid. And I know that there's possibility of 59.55. All this is posted in the Trader Lab before we get here. And this is our target below. One of them. There could be more if we kept going. That's the low of the day currently. That's a target. And I showed all of this in the higher time frame charts from Investor RT, and you guys are welcome to review this stream. I think I will make it public. And you guys could suggest a title for it. Is it trading gaps? Is it trading catching a falling knife? What do you think it is? You guys can suggest a name. It'd be useful. So let's get to the RTH open. Now, when you have a huge gap, and we know Friday, the market closed on the low. As I went over at the top of the stream, we know there are longs sitting in here because we've been going higher, and in longs, it's time to shake the tree and maybe get these longs out to some level below. Now, there's another part to this. What do we anticipate? And this is part of what you learn in Trader Lab. You have to anticipate to participate. So what do we have? If we get a gap, number one, that's blowing out the longs. Number two, that long liquidation is going to lead to selling initially. So late sellers to the party getting short. Now, what happens after that? Let's think about it. There's two possibilities. One is we keep going down. Everybody's running for the exit. Here's the other part of it. And I always talk about this in Trader Lab, and I stress this. The open is a very dangerous place to trade. Developing traders should be narrating the open, learning to anticipate the open, and have a separate trade plan for it. It is not mechanical. When you have a gap like this, a huge gap, there's going to be huge volatility. The book might be thin, and we're going to get those breakout traders or traders who missed Friday's short because they didn't hold over the weekend, or they just woke up this morning and read the news about the tariffs and they think it's the end of the planet. Well, we gap lower, we get those sellers, and then we get buyers. Let's look. And the squeeze, and then we can go lower. So this is how this might work. And again, I say might because it's always random. So in the Trader Lab, let's look. RTH open. This is called developing volume point of control. It's a high volume area. Now, what is all this? This is auction market theory. This is using a volume profile. What do I see up here? Just saying, now this is just before the RTH open. I see liquidity. I see passive sellers. I see a selling iceberg. And I'm just saying this is a sell structure. Now I'm going to be going down into microstructures if I have time, but I really want to be focused on multiple ideas here. Now I trade in something, and I always discuss this, called fractals. And I know you guys call it time frames. You know, it's not, maybe it's minutia. The difference between what I consider time frame and fractal is time is fixed, fractals based on participant behavior. That's all it is. So if it takes 12 minutes for this, do I need a 12-minute bar or candle? If it takes, for this behavior right here, it takes 2 seconds. What do I do with that? Do I put that in a straitjacket of time, or do I read it? So for me, using a high tier order flow tool like Bookmap, I want to read the behavior, because my job as a trader is to attempt to detect change as quickly as possible. So let's look at change. This is passive. It's resting liquidity. I have my buyers in control here, and I see a seller here. Now my buyer is here, my seller is here, my seller is above my buyer. So right here, I don't know what's going on. Seller's here, buyer's here. Now, if this seller is absorbed by these buyers, we are going to go higher. If the sellers begin absorbing the buyers right there, and we break below the buyer, it might, underline, suggest a reversal. Let's look. And where did the sellers take over? Right here. Now, this is super micro. It's just something you can learn. And that's your resistance. So anyway, RTH open, okay? And you'll get to see how this works. So this is called developing volume point of control. It's the retail price. It starts at 0 and it measures volume. What is this thing, this volume profile? Why does it represent the market so well? Well, it's measuring shopping. When you go to the store, it's very simple. Trading doesn't have to be complicated. We tend to think if it's complicated, if we rationalize complexity, we're going to make complexity the issue and then add complexity to look for certainty. In other words, more indicators, more time frames, because we accept in our minds that the reason it's so difficult is because it's complex. Is it possible that it's not complex, that it's actually simple, but the problem for us is it's random? Isn't that a different problem? And this is an approach that I take because instead of using an excuse of complexity, I had to redefine it in my own mind of what the problem was. What's the obstacle to participating in this thing? Is it more indicators? Is that the solution? Or am I just adding more noise in a random environment, which now I am making it more complex and really maybe not tradable, other than random outcomes, right? So too high, break low. Now right here I see a sell sweep. This suggests to me the possibility of an upside rotation. Now, I have no idea. It's not my job. I don't care. I'm going to label this. I call it a variable high volume node, and it's right there. This is the retail price. Now, I figured out many years ago, and I made up terms to describe this because it didn't exist when I was first doing this, that this is a shopping experience, and buyers and sellers were here, and now everybody's left the store. The buyers and sellers are now doing more volume here than they did here, which is logical because we've been open now, for a total of 15 seconds. Volume is moving lower, price is moving lower. I've got more sellers. Remember, I'm looking for sellers. However, watch. I cross above here, and now what was I thinking at the top? And I don't know what's going to happen. Sellers first, and then a squeeze. Why would it squeeze? This is very important. It might, and I always have to say might because I don't know what it will do. Being a trader is anticipating what it might do. What might it do? Well, in your trade plan, it might go lower. And then if we have shorts in the market from Friday who are sitting on huge profits, they might respond. And that's called responsive buying. They might respond to the gap and then cover. And then when other traders see the buying and coming across the range, it might squeeze. Then if it does squeeze, we want to be looking for a location to possibly interact with it. Let's go see where that might be. This is VPOC migration. This says, now let's look at the language. Too high, too low. Let me mark it. Got to be consistent. Keep putting these in the wrong one. Too low. Going to label it. I think I'm going to just move this around a little bit. Whoop, wrong one. One second, guys. Post your questions. I can't see them at the moment while I'm doing this, but I will be looking shortly. So let's go back to where our targets were. This is our target. Now, I showed you this at the top of the stream. If you missed the top of the stream, you can review it. All this is laid out before the market opens. So this 85 and change is our long target and possibly a place to get short. So let's look. So for me, no longs, hanging out, looking for a short after the squeeze. And again, I have no idea. Market could just keep going. Let's look. Remember, this is our location. This is my first short. VPOC migration. Now watch the story. Now, So that's my short. And what I want you to see that's most interesting, I think, is the location. This is my location. We also have the ETH high. So when I was looking at this prior to the RTH open, I noticed that the ETH high was here. Well, this is an important price in the auction. And if it's too high, then we can sell off from here. So this was my first short. Let's look at it. Now we break under here. If I can't get back above here, it also suggests going lower. And right now, this level is an outside edge. And an outside edge, if you want to think about what's going on here in the auction, this is called a low volume node. And so you know what these terms are. I'll just let you know. One moment, let me get it on here. See, I'm trying to stay with this because I can show you how it develops. This, when we auction down here and we left it, that says at the moment too low. When we do this, same thing, consolidation, and we leave it, it's too low. Then we run around and we come up here and it's too high. What might be too low? This outside edge. So for me, on the short, I was going for this. So this was 72. All this is in TraderLab. And then we have a variable high volume node here. This says this was a retail price. It's too low. This is too high. So this is support. So I have that as a target and this. Let's watch it. Notice where we come. There, variable high volume node here. So what happened for me is I got scaled. I got taken out. Just let's watch. And where do I come? To the ETH high, back to my levels. So what do I do again, you ask? Well, the fact I get taken out of a trade is kind of like part of coming to work every day. Right here, I have exhaustion. Now let's look at the triggering structure. You can learn this. This is TraderLab trading. So the buyers are here. The buyers are here. Again, location, location, location. This is real estate. As far as I know, going to the moon. These are on the price map. This is the same trade I took earlier, except it's from a slightly higher location. Has anything changed? No, other than my broker's excited. I'm looking forward to the gift basket. Now, let's look at the trigger. These are TraderLab triggers. You can reverse engineer these, and you can make them part of your plan if you're inclined. So what happened here? Now, this is how Bookmap helps me. All the levels are coming off Investor RT, so these are all on here. So pass it. Now, buyers are in control here. One moment. Got to make an adjustment here. While I'm making this adjustment, you guys have questions. I'm going to come up and take a look. Thanks for your patience. How we doing in YouTube? Please give a like. So let's look at this. One moment again. Okay. So this, again, location, location, location. We're at my levels, and these are auction-based. They're not really mine. They're the markets. I just try to align. So I have my buyers in control, going to the moon, right? And right here, I see a seller. So I have a seller here, but I don't know this. I got my buyer here. I got my seller here. When I'm above the seller, the buyers are still in control, but the passive sellers are here. And I don't know if we're going to keep going. Nobody knows. Maybe you do. Come to TraderLab, clue us in. But once this seller, and this is kind of the spot right here, when this seller is below that buyer and this seller, then it's a short. So I took another short. Let's look at it. And if you get a counter rotation back up, you can sell it if that's part of your plan. And where am I trying to come again? Back out here. Let's see. There's my scale. So, what's the difference between this and this? Nothing. It's just random. Where was my target? There and here. What's this? There. Now, why would I go lower? Because stops are under here. So that sets up for me, I'm going deeper, maybe. Mo's going to say maybe because I don't know. And then I have support here, and I have targets at the overnight mid, high probability, and we have a gap under here, and we have this. Okay? So that's my next target. And I posted these in TraderLab. And by the way, you guys are all welcome to TraderLab if you're inclined. So VPOC migration. Now I'm going to show you an advanced setup, if you will. I don't like to use that term because these are based on structure. So I call them structured trades. But let's take a look at it. First of all, and this gets more advanced, we come up, we hit the VWAP in the mid. This is an outside edge. It's a low volume node. So I have these boundaries are created by the auction. And what a low volume node is where basically the volume dried up. And if you look at these like what they are, distributions of volume, this is the retail price. This is where the buyers and sellers are willing to do business up here. But if we run out of buyers and sellers and basically they say, I'm not going to pay that, then we move to another level. We move to another level. And if I break down and leave this, then this is resistance. It's right there. Right there. So I have resistance. Now, there's two parts to this. There's the outside edge. There's this high volume, low volume, high volume, low volumes. They all act like their own little support resistance. Resistance, resistance, resistance. If you're coming up from below, they're all areas of resistance. So we know about the VWAP in the mid, and if that's your thing, you would take that. If not, you don't. Let's look. VPOC migration. Now, this is a structured trade or a continuation setup or a trade management opportunity. At the time we're over here, you see how this is cut off? There's 1,000 contracts down here. That is not exhaustion. That is saying potential continuation. So it's only shorts for me at this point. Let's look at some structure while we're at it here, while we're visiting. I'm going to take you into a little micro. So this is too low. It's right there. Break high. Resistance is here against this structure, this little microstructure. I'm going to put a little line in here for you. So if you're tracking these micro auctions, that's what this is. Buyers are here. Sellers are under this buyer. Now, if you're very adept at this, you have two choices. You could sell this if you understand what's going on. But if you don't, you could sell this because you're leaning against the rejection of this price. We come back. Now let's look at another entry here. The buyers are here. You got your mid and VWAP, and we are leaning against this, okay, which came from over there. When you break, once you break here, you know you want to be short, maybe. So let's think about what we have going on here. Buyers, 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 buyers break low. So where sellers are below these buyers now. So all of these guys are under the bus. So if we want to get short, we want to try to pick it up on a counter rotation. So where is our volume? Well, our outside edge is there, and maybe even here. So let's just try to see if we can see locations of behavior. Microstructure is here. Now, this may not fit you because of the range and the volatility. So you wouldn't have a trade here, but let's just see what it does. So this is a potential short, and if you can't get into it, there's nothing to worry about. You just wait. I think we had a report at 9 a.m. And where do we come back? Let's look. We have high volume here. I'm just going to mark these so you can see the locations. That's coming from there, right there. This is resistance. But now I have more high volume. Here, let me show you. Now, none of these, the fact that it has high volume or doesn't have it, if you're in Trader Lab, you would begin to understand this language. It's a language of the market. So outside is here, low volume area. This is too high. This is too high. I break. So I have a triggering structure, but I don't know how far back it's going to come. It's part of the thrill. But what do I know? Right here, I'm under this distribution. This is the auction market theory. So the auction's doing this. Well, that fell out. Then we have this. No, I'm not paying that. Then we have this. Then we have this. So you have these little compartments of volume. Well, if you understand what creates them, and this is the language of the market, I don't use any indicators. I know what might happen. I don't know what will happen. And I know where it might happen, but I don't know what will happen. So when I get this, I have resistance here, but I already checked it from over there. If I run away from it, then I know this price right here is too high. Then I have this outside edge, which I blew right through over here. And if I get below the high volume here, which is like a retail price, and I check down here and rotate, I can be looking at this low volume area if I get a pullback. Now let's get into this pullback. So I know this is resistance, and now I come here. Let's open this up and get very, very, very micro. And this is what you can do with Bookmap. So right here, I have chop, chop, chop. What is going on here? Buyers are here. Passive sellers are here, right where that other selling was. So I know there was selling over there, which I just showed you. And now I have a trigger. Where's my micro high volume? Well, it's right at this LVN. It's right there. You can see the volume here. And it's over there. So I've got some alignment. So too high, sellers take control. These guys are under the bus. The market tends to retrace, not always. And what does it test? The high volume in this structure is a store. And if you're in the store and the shoppers are in the store, sellers and buyers, and then the buyers leave the store, that price might be too high. Then if I rotate back to check it, I like shopping here, but it's still too high. My sellers who are here, and if we rotate back, they are still here. They may sell some more. Trigger, test, break. Now I'm below this volume. So I tested an outside edge. Microstructure says too high, too high, too high, too high, break low. Where's my volume? It's now here, too high. So this is resistance, and let's see what it does. 9 o'clock, that was a report. I held into the report. Why not? Let's have some fun. And it was part of my plan, actually. Let's look at the volume. Let's see what happens here. What is going on here? Well, here's your chop chop. Where's my resistance again? there, and now I have volume here. There it is. My target is down below. Let's see what happens here. And I don't know. I don't remember. There you go. Another short or a continuation trade management opportunity. That's up to your individual trade plan. So let's watch. Now I'm going to mark these. This is just a short sequence. I'm just kind of showing you guys how you could use this process. So if you have indicators and you have conflict or lagging indicators that may or may not work, I think in a day like today, a lot of things might work because of the rotations. But what's happening is if the trend is down, and at the moment it is, how do you get involved? Well, you need to be doing something called mean reversion trading, which is outside in. And you would learn that in TraderLab. It isn't one size fits all, which is what most of us are trying to do with our indicators. Put the market in a box and then expect somehow that it's going to keep doing the same thing and we're going to get paid. I'm going to suggest maybe not so much. Just my opinion, doesn't mean anything. There's our target. And where's our resistance? Well, we got resistance there, and we have an outside edge over here. So outside is over in here, low volume node, and we're looking for wherever it is down here. So this is another short opportunity or not. And I say or not because if it's not your trade, you just don't do anything. You just hang out, and then you can use these levels for trade management. I'm going to go a little shorter time frame here for you so you can see. So if you come over here, you see this volume, it's only measuring this. So I'm going to put a little line across here. And there's other volume here too. There's some here, some there. Okay. So it can go anywhere. I don't predict anything. I just look at levels. And I also know this is an outside edge right in here. Low volume node. In the market, I want you to know about low volume nodes. They are not walls, they are poorly auctioned areas, and they're created when the market runs and doesn't chop, chop, chop. So the market's tendency is to come back to areas that were not auctioned and test them. And then you would learn this in TraderLab. So let's see what it does. There's our low volume outside edge. This is our test. Now let's go a little further. Low volume outside edge right here. And this is a trigger in the TraderLab right here. This is your high volume. This is too high. Trigger is here. Pull back to here is a potential short right there. TraderLab structured trade. Stop is over here. So let's see what it does. So here's what would happen. You took this one, you would get scaled because support is here. You get a scale, and then you're going for lower. Okay? This is called VPOC migration. It is saying for the day so far, most of the volume is here. I'm going to label it. It's important. Now there's two possibilities here. I'm going to stop soon and look at your questions if you have them. Please post them. I'm going to come up for oxygen. Now here's the key to this. Two possibilities. Right here, we can either push off towards that naked volume point of control down below, which is our target on this trade, this, or we can cross above it. If we cross above it, we are going to squeeze, and then we have to be looking out here for our low volume node. So let's end this. So let's see what it does. Low volume node is here, and there's one here. Okay, so we come back outside to here. Now, if you're managing your trade, when we cross here, if you're in TraderLab, you would cover if that's in your plan. In TraderLab, we understand what this says. What it says is we're moving from a continuation down to a counter rotation. Now, if we think the trend is down, which at the moment it is, then we're looking for what's called mean reversion. This is a outside in mean reversion trade. So all you're trying to do is get outside. Where's outside? Well, we're going to take stops. There's 114 coming out. Thanks for playing. And then in the auction, we have levels. So it's this one and this one right there. So I know in the auction. Now let's see, do I take the wrong level or not? Well, right here is an outside edge. So you see the reaction right here. Buyers, buyers, buyers. Sellers are below the buyers. I come here. If I took a short here, I would take a stop. However, let me give you the however. This is your scale because this is the mean. So you have to be able to get in here with enough range. So if your stop is above here by 2 or 3 ticks, and where are you going to enter and be able to cover the risk from here to there? If the range from here to here is larger than from your entry to your stop, then you don't have a trade if you're in TraderLab. Now, if you want to gamble, that's up to you. That's all fine. I have found there's so many trades that show up during the day, then wait for ones that have better potential. This is the next location. So we have this location, which is there, and then we have the next location, which is here. And this is the location for a continuation trade in alignment. So this is your trigger. Let's look at it. It's right here. Buyers are in control. There's a consolidation. Well, trying to didn't work too well. So basically, it's too high over here and it's too low here. The buyers are there. You can see the reaction. So I got sellers here and I got buyers here. So right here is the volume inside of this structure. Right there. Sellers take control. As soon as the sellers are below the buyers, which are there, passive buyers, and up here, aggressors, which are buy stops, and there's my resistance, there's my trigger. I can sell this, I can sell that, and my stop is there. And where am I trying to go, you're asking? Here. Let's just watch. This suggests lower. It's a sweep. Target is here. This is where I covered. Then you get this. Now, it's ironic, isn't it? Questions? Now, let me remind you about something. This was Friday's target. This, what we opened below this was our short this morning. This was our target this morning. From there to there, and a couple, rotations in between. This is day trading. Now the news comes out, but here's the interesting point. The news came out after we hit our target on Friday. The news came out after we hit our target today. The news came out after we shorted this in the morning. Is that interesting to you? I find it very interesting. This is Investor RT, if you're wondering. Questions. I'm now looking at the questions. And this is a news event. This is, Mexico talking to Mr. President Trump. Thumb up, please, on YouTube. Hope you're getting something out of this. Remember, this is trading the auction using order flow as the tip of the spear. and then auction market theory and the volume profile to attempt to get in alignment with participant behavior. For me, I don't use indicators. I figured the participants know more than I can with some lagging indicator. That's just my opinion. It doesn't have to be yours. But I think, results are kind of important in this business, and it's the result. So if you have a positive result that's consistent and you're in the business, then it's all great. It's if you don't have that outcome and you're doing this a process that might be defective, but you don't understand the business you're in, you might be trying to solve for the wrong thing. That's just an opinion. Now, we get our move to the upside. Now, what do we know about this? That's where we shorted, right? In the morning, this was what we were selling for the move down to 50. Now we got our 50 and we're back here. What does that tell us? Maybe this is too low. Maybe now this is an outside edge. We're going to label it. Try to label it. And we're going to call that a low volume node because that's what it is. Then we have to see where's our areas of interest. Let's look. Now let me come back here. As this changes, I have to change with it. I have to keep my levels up to date. I have to be looking at the distribution of the volume. So I don't want to get myopic in here. It's very easy when you have multiple pieces going on to get focused or mesmerized by the order flow in the micro. Everything, this is like Russian dolls. Everything is overlaid on different time frames and structures. So this is a potential resistance area. It is a low volume node. What happens at low volume nodes? We can go into them, a little through them, and then maybe rotate. So we're going to see what happens here. So here we break through this liquidity. We pull back to volume, subject to your plan. This might be a long, it might not. I'm only saying maybe. It's advanced, so we won't go there. So I have buy sweeps going off here. I'm looking for a potential counter rotation. I'm coming to a level, and I don't pick highs. If I was sitting in a long, I'd be looking at these levels as targets, not to necessarily fade. Again, if you are a counter trend trader, you can do whatever you consider appropriate. Notice, location. Now, for me, I have a couple choices. I'm just going to give you a sense. And this is trader specific. This is not, there's no rules in trading. It's only edge. So right here, when I see this, and I see this, and I'm up at my location right here, I am looking for a counter rotation, not necessarily a short. If I see the behavior, and if I'm long, and this is a trigger right here, see the volume. Let me show you the volume. You see this right there? This is the shopping experience. Sellers are here, buyers are there, buyers are here. I get a sweep, big sweep, selling icebergs, buy stops coming out. And now what? Buyers are here, sweep is there, retail is here, sellers are below the buyers. That means these guys are under the bus, order flow. This is a micro structure. Now, these are not tradable. This is just to show you with Bookmap where you can go with this. You can go anywhere you want, basically. Buyers are here. Sellers are below the buyers. Buyers try again. So I got buyers in control, this one little seller over here. Now I got another seller who's below this buyer and below that buyer and under the buyers here. This is a sell trigger. Now, what do you do with this, right? Well, subject to, let's just assume you're trading long at the moment, maybe, and let's assume that you're managing your trades with some kind of vetted trade plan. This would be an exit, or if you're a counter trend trader, and this is up to having an edge, this would be a short. And yet, I think it's a high risk short. So for me, not so much. Now, where do we come? What's out here? Low volume. Where is it? Out here. So if I come out here, I have a couple possibilities. If I'm coming down here, with this is where the low volume is. And remember, they're not walls. We go through them. Why is it not a wall? You see this run? It's not auctioned. So there's just a run here. And what else do we know? There's stops under here for the longs and stops under here. If I get a sell, then I know I can come down and take out the weak longs, and I can come all the way down here to this high volume. But what's in between? Low volume. So I can come out here, and then I don't know. Remember, I'm not saying I know anything. I'm saying as I know what it might do, never know what it's going to do. We're not in the job of knowing. And that's really hard for us as humans because our desire is to know. Our desire is to have confidence, and our desire is to wait for confirmation and to have certainty. Is that you? Are you designing a trade process based on confirmation and certainty? I'm asking you the question because if you are, as they say, you might be barking up the wrong tree. Micro high volume is there. Your test of the LVN is out here. So now we have a condition. If we think the context is up, the condition is called mean reversion. Remember, on the short side, we were doing the same thing from the shorts. Now it's only longs. Support is here. Outside edge is here. This is a potential long, and you're going to try to come back here, here, and higher. Let's just see what the behavior is like. Here's your reaction. There's your volume. So what do you do with this? Well, if you put a trade on in here somewhere, your stop's got to be under here. And where was it too high last time? It was here because we broke, tested, broke. Now it's long to there because that's the last place we rejected as too high. That's why this would be a scale. Then your stop is under here. And if it falls back under here, you're out of the trade. You scratch, and your broker sends you a coupon to the buffet. Or we come out. And remember where our next area is. It's here. Notice the behavior at the level. And now we have the IB. And we have a trade in the Trader Lab called the IB continuation trade, and it sets up at 9:30 my time, Central Time. And before I go into that, questions, guys? Raphael, liquidity, is it for a reversal or a breakout? It's the reaction at the liquidity. And I always kind of think of it like Pac-Man. You got liquidity in the book, and we don't know the purpose of that liquidity. It might just be a spoof, and they put it in there, and everybody sees it, and then they pull. Or it stays, and you get it getting nibbled on by the buyers, and then they pull the rest of it. It opens the hatch, or it stays in the book, and the limit orders, the sellers at that liquidity consume the buyers, and then you get a counter rotation. So there's no way to define it in a specific fashion. Like many things in order flow, it's what happens after the fact. So if I have buying here and then I break below it and I come back and test it, I'm really testing what happened here. There was a passive seller here. So that's what I know. But I don't know what's going to happen. So that part, I don't have that. But the thing I do have is I know where there might be behavior, and sometimes it's there and sometimes it isn't. So it's all a matter of what happens. Like here we have buyers. Why isn't the market going up? Because there's a passive seller, that's a selling iceberg, taking the other side, and there's these buy stops coming out. So these buy stops come up, they look like they're delta because they're market orders, aggressors. These guys are selling. Why does the market rotate down? Because there's sellers there. So the fact this was here doesn't necessarily mean that it's a short. That hope that answers your question. How we doing in the Bookmap Discord Trader Lab? So let's look at the IB. This is a structured trade that's in the Bookmap Discord Trader Lab community, and there's 60 PDFs of structured trades you can download and then reverse engineer, and they actually go along with the library of webinars that's available to all of you guys in the Bookmap Discord Trader Lab community. By the way, if you're in YouTube, you're visiting, there's a link down there, and there is no cost for this, and you're welcome to visit. So this sets up a structured trade. This would be a long trade. And here's where it sets up at 9:30 Central Time. The first hour's high, which is called the initial balance. If we break out at 9:30, we take out the IB, which is pretty much right here, and then we pull back. We would then start looking for locations. Where's the location? Let's look. The location is the high volume node, which is right there. And this is your outside edge, low volume node. There and then there. Let's not forget. So let's look at our levels. And this is created not by me, not by you. It's created by the participants. And the urgency over here and over here is what creates these low volume zones. So I know two things. One, I got a structured trade. And if this is too low, I'm going to continue. I also know I can come out here. I can come out here. That's what I know. I don't know what it's going to do. So let's look and see what it does. And micro high volume is there. You can see it, and you can see it there. Low volume is here. We also have high volume over here. So the high volume acts like support. The outside edges, the LVNs, are weak areas to test for stops. And the reason is this swing right here has stops under it. So if I come outside and I get down here, I can pop the stops and then come back because there's always stops on both sides of swings. So let's see what happens. So we're looking for the IB continuation trade, the IBC. Notice the behavior. So this is a long in the Trader Lab. Your stop would be under here or under here. So you could take the long there against this volume. So this is a volume structure. You have your long here, you have your long here, and then you want to get risk neutral. And I posted in Trader Lab 25, I think it was 25 to 35, I don't remember, was an important level. Can't remember any of this stuff. So you'd be risk neutral, your stop goes under there, and then you put your helmet on. Let's watch. Where do we come? What is this? Now, let's talk about the real world. Subject to how you manage your trade, you might get taken out on a trailing stop, or your stop stays under here because this is the outside edge. Let's see where it comes. Sell sweep, this says potential reversal coming. If you got taken out right here, it reverses, microstructure. You could take another long here if that's in your plan. We come back to the outside edge. This is called mean reversion, and it could come here. And if you get taken out, now here's something important to know. There's stops under here. So if you come out here and you don't come down, that's very potent. If you get down to here This is the outside edge of this one. And of course, you could go wherever. There's no prediction. So we come here. Now, using the sweep detector, this is telling me sweeps. And often when we see sell sweeps, we're looking for a reversal. Doesn't have to work that way. It's just the way. One of the things you'll observe if you work with a high tier tool like Bookmap, you're going to see phenomena. Now, this is resistance. Let's watch. 35. That liquidity question, let's watch the behavior here with the liquidity. Buy stops coming out. Long, watch the behavior. This is a level. It's on the map. Are you with me?
Yes.
Raphael, I don't know if you want to trade breakouts. I certainly don't trade them. I trade retracements. Um, when you're buying the high of anything, how do you manage your risk in that? So I really can't comment on using them for breakouts. That's not what they are, um, in my opinion. I don't use them that way. So if you vet that and it works for you, then you should definitely do that. Notice where the resistance is. It is here. High volume. Let's look. Now, I posted in Trader Lab. I wonder if I can get back and show this to you. 38 quarter is a low volume node in a higher time frame as you think of them. So 38 quarter. Here, that's a level right there. And you see where it came off the chart. And I don't know of any software that does it better than Investor RT. 38. So what's the high here? I don't know. 38 something or other. So this was a level for a potential reaction. This is the auction. And think of the auction as a live narrative. Now let's remember we had VPOC migration when we were down below, and it crossed above it, and we got a squeeze. So let's look here. We get VPOC migration here, and what do? We cross above it. We don't. Right here, it looks like we might counter rotate. That's all possible. Where's the low volume outside edge? It is there. Let's just mark this thing. So what I'm trying to do here is if I think the trend is up, I know I have resistance here in the higher time frame. I know the market is short, so we're in the squeeze area, and I know I have a low volume outside edge here and here. Okay? So if I come down, I know this is an area of potential support in here. It's there and it's there. And what happens with low volume nodes? We tend to test them and go through them. You don't have to, because the market doesn't have to do anything. But what I know is if this becomes too high, and that's a higher time frame, one of those, then I can rotate in the intraday developing time frame to this outside edge because this volume was too low, or blow through this and come to this outside edge, and there's no precision. So I pull out here to an outside edge, no clue, break high. Now, if I don't come back under here, then I know this might be support. It's a high volume node. And in Trader Lab, subject to your plan, this could be a long, or you're just sitting long from way down. It's all up to you. You can learn all of this in Trader Lab. So where do I come? I still come outside. So if you took a long here, you got, this is your resistance right here. If you took a long, you got a scale ahead of this resistance up here. If you didn't get scaled, you take a stop. Now we come down here. I see a sell sweep. Where am I? Back at my IB. I'm looking for a rotation up because I have the sweeps, I have a location, I have an outside edge. This is all dynamic. Now it's out here. Let me move this back a little bit so you can see what it looked like at the time. So What I know is I have a low volume node here. I've got high volume sitting over here. So let's now move it forward. I now test this area. This is my IB. I have my sweep. I'm now looking for a long continuation trade. This is my structure for a trigger. Now right here, let's just look at the minutia. Here's the liquidity. What are we going to do with that? Don't you wish we knew? Buying icebergs, they're executing here, and then 155 disappear. Sellers are here. The buyers are here. I get a rotation. I come down and test. I have a sweep here. Let's watch the behavior. Where do we go? Resistance. So the way I kind of put these together, I'm just saying it's an idea. It's not a recommendation, of course. If I know this out here might be too low, and I have a location, which will have stops under it, by the way, and I see a long, it's up to me, of course, if I get a trigger, and what is going on here? Buyers, 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 buyers. Where are the sellers? Here. What happens here? Well, if I take a long, I'm not saying I would or I even could. I know that's my resistance. So it's up to me whether I want to get long or do nothing. Now, let's come back here. IB high. Now, there's stops and there's a swing down here. We want to be conscious of that. And we want to see what happens in here. So let's observe this and let me look at your questions. Now, what we're doing here, subject to, is we're going to be looking for a potential long if it sets up, and I don't call trades. The fact I'm looking for something doesn't mean it's ever going to be here. It just means I have locations and I have a location. I have to look left and see where the stops are. Where are the stops? Under this swing. Outside edge. So while it's doing this, I'm going to be narrating it. This was support. I'm now below support. So let's watch. So we have too high, which was marked, and now we're looking for too low. Where will it be? Well, good question. Where are we going? No idea. Not my job. So let's just keep an eye on things and see what happens. Questions? Okay, let's watch the outside edge down around 603-ish or so outside edge. We want to be trying to watch the outside edge. This is the IB. We have a potential trade here, but we have to be conscious of where the stops are. So let's watch this right here. Here's the high volume. We're going to put a little thing around that. We're going to mark it. The buyers are here. The sellers are there, and the sellers are here. So that's our little sandbox. Let's see what it does here. If we get a trigger, the potential is to come here initially, not a trade recommendation. Don't forget, we have an outside edge and stop sitting below us. So the market can do anything at any time. That's why you have to have a trade plan. So you anticipate the behavior and where it might take place. Again, this and this might be material. So we're just going to kind of hang out here and see what we can see. If we get a trigger, it sets up this, which, has some meat on the bone. It's a 10-point trade, not a recommendation. Remember where the stops are. And this should be something you're always thinking about. The fuel is under there, and then the fuel on the next swing is under here. So that is always a consideration. You have questions here. Let's just wait on this thing. So we're either looking for a trigger. Buyers are here. I got a buyer here. I have my sellers there and here. This is my sandbox. Let's just observe it. It's not a trade recommendation. Everybody takes stops. Part of the joy. Called cost of production and overhead. Casinos pay the gamblers and give them the cocktails and take it to the buffet. So let's just watch this. If you have any questions, please post them. And thanks for visiting Trader Lab. And if you're visiting in YouTube, if you're interested in the Trader Lab community, there is no cost. It is a community of serious traders. It's about building out the business of trading and understanding the business you're actually in. Most retail traders do not understand the business they're in. They get a software toolbox and they see all these wonderful indicators, and then they go on the quest to find the right mix, the holy grail, the needle in the haystack. Well, indicators came into the retail space back when I started in 1980-ish. And every indicator that's ever been thought of has been gone through with a fine-tooth comb by everybody who's done what you've done. So, and yet most retail traders don't have any longevity in the business, though everybody has winning trades. We all have winning trades. If you can't trade, you still have winning trades. That's not the point. Gamblers also win. Even if they leave all their dollars with the casino, they do have winning hands. So it's not, in my opinion, it's just an opinion. The answer is not in your indicator toolbox. The answer is in understanding how the market works. And then if you actually understand how this works, you might be able to deploy indicators because you would understand what condition the market is in and how to approach it, because it's dynamic. It's not one size fits all and it's just plug and play and you have an ATM in the basement. I think that's naive, you know. So if you've been working hard but waking up in the same place with Trader Groundhog Day, then you might want to visit Trader Lab. And there's a lot of streams, by the way. I leave a number of streams up. Most of these are just available to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, build out your trade plan in your library. But if you follow this stream, you're going to see something. What you're going to see is a consistent application of structured trading in a random environment. And I think the key piece to understand is randomness. It's the last place a human being wants to be in a random environment. We want certainty. We want predictability. We are wired to run away from uncertainty. You know, back in the day on the tundra, if you're out there and you didn't know what was behind the tree, like maybe it's a saber-toothed tiger, maybe you wouldn't go and look behind the tree. You'd stay away from it. And over time, by being cautious and fearful and looking for confirmation of the right conditions so you could chase your prey. But if you had uncertainty, you would not chase it unless you knew there was no saber-toothed tiger behind the tree. Well, in this business, we have to charge after our prey and never know if there's a saber-toothed tiger waiting for us. We never know if we're going to take a stop or get risk neutral or hit a target. We don't know any of that. So how do we operate in this environment? Well, that's what the Trader Lab is all about. Understanding the business you're actually in, not the one you think you're in. And and if you go out on the internet and, YouTube, everybody talks, everybody is saying all you need is this and how they made $1 bazillion in 12 minutes and all that. That's all fine. I'm sure it happens, right? Has it ever happened to you? Never happened to me. Though I always had winning trades. So what is that? How do we sort that out? How do we make sense of something where, gee, I have winners. Gee, I have winning runs. How do we make sense of this? What do you think? Sweep? Let's see what happens. Now, remember, these are not trade recommendations. Where might we go? Maybe there. Are you guys tracking? This is Trader Lab. The Paris High. There's a link in the bottom of YouTube. That's the first thing. You need to confirm your Discord username and email, so whoever comes to visit is not spam, so we can keep the community wholesome. And then the other part is you look for the Bookmap Trader Lab. You'll come into the Bookmap server. You're going to see all kinds of stuff in there. Check it. You'll find Trader Lab, and then say hi. I'd like to meet all of you. And also download the 60 PDFs. They look, and by the way, this is our, remember? Now all this is before the fact, right? Can't make this stuff up. And remember, I don't call trades. It's you don't need. And I take stops. So you take stops. I take stops. So we all take stops. What's a stop? Trade management, risk management. These are structured trades. Some of these are actual trades. Others, like this. These are actual trades. And the point of this is, I'm not a vendor. There's no cost for this. These were put together a long time ago. Traders are asking me what this is from 2020. Okay. And a lot of this also was developmental. I worked with Bookmap coders with ideas, and some of these have been incorporated into some of the current add-ons that we have. Others have, as they say, gone to the happy hunting ground. So here's some order. This is an actual trade I was in short. This is a bracketing algo. This is order flow. I see these guys push, this pulls. It was like, no, I think we're out of here. Exited, and then the market just exploded up. This is how order flow can help you. And there's a lot more. But you can download these, and then there's the library of webinars, and you're all welcome to that. Kind of interesting stuff, don't you think? I've been at this since 1980, don't forget. So I've had a lot of time to go down dead ends. How many times have you gotten kind of excited about what you see and what you're doing, only to see it break down? That's why I did that webinar on Trader Groundhog Day. So our scale would be up above here. What is this that's going on? This is called mean reversion. So the idea of this trade is to come back here to get risk neutral. And it's not at this. It's a couple ticks before. I usually go 2 ticks before. So the idea is to attempt to get risk neutral and then hold the runner for continuation. And what do we have here? A gap. What do we have up at 65? Another target. We have yesterday's low. We can anticipate a reaction as we go to fill the gap, profit taking. And we also have that, which was the highest price. Let me come back and show you the higher time frame. This 68, if this was the target coming down, so let's look here. We opened here, tested this. It was just short down to there. This sets up a long. And where are we trying to go? Well, fill the gap and then maybe there. Notice where the high was on Friday. There. This is auction market theory. Something for you to think about. Please give a like if you're in YouTube. I hope you're getting something out of this. This is trading in fractals using the auction and the volume profile. I don't use any indicators. How am I able to do this? It's because I threw all the indicators away. Now, you don't need to do that. I did it. Why? Because I wanted to minimize conflict and create as much clarity as possible based on an understanding of market mechanics and what is the basis of the market. It's not your indicators. Your indicators are an output of price or some derivative, right? Okay. And time frames and all the smorgasbord. Well, what is behind all of it? Isn't it the participant behavior? So what is this? It's a language. Well, have you ever thought that your indicators are just an interpreter? Google Translate. And notice the behavior here. Isn't this interesting to you? It's interesting to me. So what would have happened on this long? You'd be rich neutral, and right here, your stop would be under here, and you'd be taken out and you'd scratch your trade. I don't know about you, but I'm okay with that. And where do I come? Back here. Now I have a sweep, and I'm going to look for a potential reversal back to here. Let's just watch it. Not a recommendation. I do not have a trigger. I'm waiting to see what's going to happen. I've got my liquidity here. I've got my sweep here, and I'm looking for a move up. Let's see what it does. And all I'm doing is following the yellow brick road. Let's see what's going on here. The links are in the bottom of YouTube. Exod, Bookmap does not incorporate, and all this is right here is another return to here. Does not use options, but there are add-ons or vendors where you can, get your gamma levels and all that good stuff if that's your thing. It's not my thing. Been there, done that. I don't need it for what I do because I'm a minimalist. Other traders are very enamored with that, and if it's a tool that gives an edge, then by all means. Again, I don't use it, but I have done work with that over the years. But I found that I don't. If I have a gamma level sitting somewhere, what am I supposed to do here? Does that mean the market's going to go there? Well, maybe eventually, but what do I do in the meantime? So I just kind of follow, I get in alignment with the market, and then I just manage my trade, and I trade at levels that are material to the participants. So whatever happens, happens. So I don't, anyway, to answer your question, no, I don't. No reason why you shouldn't or can't. Anybody can do what they want to do. That's really the beauty of trading. You kind of find what speaks to you. For me, I interpret the language. So I understand what's happening here by looking at it. If you have an indicator, where does it tell you to do something? Where does it tell you to get long? Can you be getting long here, coming back here? I mean, what would you do? I can activate right here if I want to. So this is more, and that's how I'm using order flow, is I'm looking down in the microstructure. Sellers were absorbed here. This is your auction. Break high is a trigger. This sets up a potential long, and it might only come here. Now, I'm not a scalper. I'm only showing you here in this stream how to interpret behavior. And then you can take these pieces in any time frame or fractal and make them your own. Now, many traders won't be able to interact in this in a timely fashion. What do I know about this? I had my buyers here. This is too low. This was resistance. Break high, pull back. That's a long. Going for there. I think I narrated that. Where do we pull back? Here. What's that? That's a trigger. What's this? Absorption. Now, maybe it's not your trade. Where am I trying to go? Final question. Please give a like if you're in YouTube. Use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. It's available. There's no cost. Here's microstructure right here. You can see the volume, the trigger, the test, counter rotation. Now, it's up to you how you want to use this information. You may go, well, I only want longs, and I'm going to trade to here, and you're going to sit through these rotations. You see what I'm saying? This long to here is the same trade that we had before. It's up to you. And it's up to you if you want to take advantage of the Trader Lab. There is no cost. Please give a like. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants. reverse engineer, and the rest of it. And if you're interested in Trader Lab and you're interested in this methodology, in my opinion, you got to remove the debris and make it simple. Remember, in the casinos cannot predict what the cards are coming out of the deck or how the gamblers play the cards. All they do is play games with anchored inputs. That means they play them exactly the same way. In a random environment, something needs to be anchored. In fact, I did a primer webinar. You can access that in the Trader Lab. It's the top one that's pinned at the top of the chat if you're interested. And you can grab that. And that would be the thing I would suggest you take a look at first. This is what the Trader Lab chat looks like. You can see there's a lot going on in there. You're all welcome to it. Wow, I don't know what that is, Ned. That's a lot. There's a lot of great posting, a lot of information, and it's all about a community that leverages their experience. A lot going on here. And let's see if I can show you this. This is what the library of webinars looks like. You know, why most traders using indicators fail. Are you trapped in trader Groundhog Day? All right. Order flow and volume profile wins. Day trading inside higher time frame. It's all what works for you. This is the primer webinar. It's got over 31,000 views. You're all invited. Use the link in the bottom of YouTube if you want to visit Trader Lab. Look forward to meeting you there. Please leave a like on the way out. And thanks, guys, for visiting the Trader Lab. I hope you got something from this today. And I look forward to seeing you all tomorrow. Please give a like and subscribe to the channel if you want to get notifications when there's streaming and when I'm streaming. Thanks again, guys. See you tomorrow. And if you come to Trader Lab, say hi. I like to meet everyone.